Limited, and Mr. Viswanatha Reddy, Chief Financial Officer. Before we begin, I would like to mention that some of the statements made in today's discussion may be forward-looking in nature and may involve risks and uncertainties. I now invite Mr. Paras Jain to open proceedings of the call and share his perspective of the business and outlook. Thank you, and over to you, Paras.
Thanks, Suraj. Good morning, everyone. Thanks for joining us today. It's always a privilege to connect with our investor community and share our performance, progress, and perspectives. I'm pleased to report that Pokarna Engineered Stone Limited, our wholly owned subsidiary and the primary growth engine of our consolidated business, has closed FY25 on a strong note, both operationally and financially, despite an exceptionally volatile global environment. Let me begin with key consolidated financial highlights. Q4FY25 versus Q4FY24. Revenue 262.68 crores, up 62.5% year-on-year. EBITDA 104.59 crores, up 138.93% year-on-year. EBIT 92.90 crores, up 185% year-on-year. PAT 58.9 crores, up 280% year-on-year. EPS 19 rupees, up 280% year-on-year. Now let's move to FY25 versus FY24. Revenue 930.13 crores, up 35.34% year-on-year. EBITDA 347 crores, up 56.9% year-on-year. EBIT 302.86, up 69.57% year. PAT 54 crores, up 114.68% year-on-year. EPS rupees 60.49, up 114.68% year-on-year. This outcome reflects disciplined execution through focused sales strategy, cost control, and operational efficiency at PESL. Our ability to scale premium product lines and optimize manufacturing continues to create tangible results. Now let's move on to strategic and operational updates. During the year, we capitalized our Preos line, adding new technological capability to our platform. While it did not contribute to revenue in FY25, we expect a gradual ramp-up starting H2 FY26 as we introduce new design-led offerings. Our Chromia line remains under implementation and will bring high-resolution design printing capabilities upon completion. We are also seeing increased customer demand for low-crystalline silica products. This is a directional shift in the industry, and we have to develop and invest accordingly, developing a stable raw material supply chain and formulating solutions that meet both safety and design expectations. This is a structural transition, and we are treating it with seriousness it deserves. Tariff and trade environment. Let me now address what remains the most significant overhang on the business, that is U.S. trade policy. Over the past couple of months, we witnessed
Sorry for interrupting. Your voice is breaking. Just give me a moment. Ladies and gentlemen, the management line has been reconnected. Please go ahead.
So I'll start again from tariff and trade environment. Let me now address what remains the most significant overhang on the business, U.S. trade policy. Over the past couple of months, we witnessed a chaotic and fast-evolving sequence of events. Sweeping tariffs were announced, covering nearly all products, categories, and most exporting countries, including India. These were subsequently deferred, creating temporary ambiguity. Just day before yesterday, the U.S. Court of International Trade issued a legal stay on the implementation, only for the U.S. government to immediately file an appeal and get a legal stay on this stay. This environment is no longer just about duties. It's about deep uncertainty. And that uncertainty is paralyzing business decisions. Distributors are deferring orders, fabricators are holding back inventory, homeowners are delaying remodels. The lack of clarity has created real friction across the value chain. Until a stable resolution emerges, this disruption is expected to persist. At this time, any forward-looking assumption on U.S. trade actions would be speculative, and I will not offer projections where visibility doesn't exist. Granite business. Our granite segment remains under pressure, with current performance reflecting continued weakness in market demand. To navigate this, we are enforcing strict cost controls to protect margins and actively exploring new channels and revenue streams to rebalance the mix. While the near-term outlook remains cautious, our operational discipline here remains intact. Looking ahead, before we open it for questions, allow me to leave you with few grounded reflections. As we enter FY26, we do so with our eyes wide open. What we achieved in FY25 was the result of discipline, not momentum. And while we are proud of the outcome, we do not confuse predictability. The world we are operating isn't changing in fundamental ways. This is not just another business cycle. It feels more like a shifting of tectonic plates beneath the surface of global trade, regulation, and demand behavior. Especially in our core market, the US, the very framework of trade seems to be evolving in real time. Announcements are made, then deferred, and then legally challenged. And in the middle of all this, businesses like ours are left making decisions with imperfect information and compressed timelines. It reminds me of something I learned early in my career. When the road ahead is unclear, speed is not your friend, judgment is. You don't accelerate into the fog. You slow down, hold your line, and focus on what's right in front of you. That's the posture we are taking today. Our focus will remain on doing the fundamentals well, serving our customers, running a tight ship, controlling what we can, and preserving flexibility where we must. We will not overreach. We will not overpromise or offer rosy narratives, and we will certainly not confuse hope with strategy. I am here to be a responsible steward of the business, especially when visibility is low and volatility remains high. Thank you for your trust, your patience, and your continued interest in our journey. We are now happy to take your questions.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question comes from the line of Pranav Mehta with Equirus Securities.
Yeah, thank you. Good morning, sir, and congratulations on a very good set of numbers. Sir, I wanted to understand on one thing. In 4Q results, how much of the contribution would be there because of the, let's say, the preponing by the importers because of the impending tariffs that were introduced in April? So, do you think that the numbers would be having a lot of preponing of this orders by the importers, particularly in US market?
So we actually are not privy to it, but there could be some bit of it. But I don't think there would be a large, because in general the market has been in flat mode. So we don't expect that people would have just bought in anticipation of tariffs coming, because what tariffs are coming, nobody could speculate at that point in time. So I don't think that there would be a lot of demand coming just because of the tariffs.
Okay, sir. And sir, we have seen that in 1Q4FY25, the imports into US have been very strong on the quad surface side. So have you seen that kind of intensity playing out in April and to some extent May year 2 months as well?
I think the intensity up to March was different, and the intensity following March is relatively different, is our expectation. And that's what we are saying.
Okay.
And also one has to look at the average import price as well. It's not just the quantity, but also the value around it.
Okay, sir. And sir, my second question was on this debt. So we have bought down debt considerably. And now with the new plant coming in, what kind of debt you are expecting for FY26 and 27?
The repayment is 50 crores from 25-26. And this will add to the new debt that will asking the repayment.
What is the peak debt we are seeing in FY26?
45 now it is 260,000. The fresh required.
26 quarters.
The new line will probably come before the end of the year, and that will add another 440 crores, out of which 300 will be the debt. So it will be 300 plus about 150 crores. So say total debt this year and maybe around 450 crores.
Excluding working capital.
Thank you. Mr. Mehta, please rejoin the queue for more questions. Next question comes to the line of Ankush Agarwal with Surge Capital. Please go ahead.
Yeah, hello. Thanks for taking my question. So, like you have highlighted that Q4 you didn't saw a lot of pre-buying, at least that is what your understanding is. But post-tariff getting implemented, what's the change in behavior? Are distributors holding on to fresh orders given, I think in your business line, there would be a large lead time between the order coming in and the actual delivery, and the taxation is not clear by the time the order is delivered. So how's Q1 playing out in terms of the buying that you're seeing?
So if you had followed my opening remark, I said that the tariffs have definitely brought uncertainty. And in general, the market, whether the distributors, whether the fabricators or the homeowners, all are deferring their purchases to some extent. That's what we are seeing in the demand pattern.
Okay, but would it be possible for you to give some more color on what's the quantum? Like, there's deferment that your side is clear, but like if you can highlight, because obviously FY26 guidance you can't give at the moment. But for the coming quarter, at least you can give some color on how things are looking.
I think it would be premature to give it, but I can tell you that definitely there is going to be a good amount of deference.
Okay. And second, on the Chromia, I think we were supposed to commercialize the plant by the end of Q4. That is still under implementation. So is it like strategically we have deferred it, or is it taking more time just?
No, the line is already installed. We are just waiting for few technicians for some practical reasons who are not able to come to give final touches, because we have already done sample production, but it requires some more technical correction, which we are waiting for the technicians to come this weekend, and probably in next 10 days that should be operational.
Thank you. Mr. Agarwal, please rejoin the queue for more questions. Next question comes from the line of Naman Parmar with Niveshaay Investments. Please go ahead.
Yeah, good morning, sir. Thank you so much for the opportunity. So firstly, I wanted to understand in the current quarter, there has been a margin expansion of around 30 to 40%. So you were guiding around 34 to 35%. So what would be the margin guidance going forward?
If you have been following us on the previous call also, we've maintained that around 35% is the margin to look at, but then it is subject to both contraction and expansion depending upon how the product mix plays out and how the hospitality or our cut to size business in general in the export market actually plays out. So in the quarter of Q4, we have actually had a good amount of cut to size exports also happening, which also led to the margin expansion apart from the in general product mix.
Means majorly the realization has increased in the current quarter? Because Chromia and Crayon line also not get commercialized. So what was the reason for increasing margin?
Chromia and, as I said, Crayons was capitalized, but we did not get any meaningful revenue out of it, and Chromia was not capitalized. So the existing product mix, because see, we have products which we sell at $5, there are products which we sell also at $13. So depending upon what mix of the product gets ordered and sold during that particular quarter can actually impact the margins. And also the cut to size business, which we have said in the past that I think I can say that the last quarter was one of the best quarters for the cut to size exports what we did. So that was also an important contributing factor for the overall margin expansion.
Okay, understood. And secondly, how is the demand outlook on the domestic side? Even though we are major towards the export in US only, but do you think there has been a pickup in the domestic side? And
yeah, gradual there is growth in the domestic market, and we have already started appointing few distributors in the metro towns, and you will see a better growth coming in this present quarter and also the present financial year.
Thank you. Mr. Parmar, please rejoin the queue for more questions. Next question comes from the line of Dixit Doshi with Whitestone Financial Advisors Private Limited. Please go ahead.
Yeah, thanks for the opportunity. My first question is, let's say just before the tariff as of, let's say, 1st of April 2025, we might be having some orders in hand and which will get delivered over next couple of months. So then on that product, how the tariffs will work, whether we will have to digest that impact or the distributor, or it will be evenly, how things will work?
It's a business decision. It's not a general statement. Depending upon the product, depending upon the customer, depending upon the relationship, we'll have to figure out something. Because in these times, if you simply take a particular position, then it's very difficult. So we may have to.
But are we able to pass on some impact, or do you feel that will lead to a margin pressure in the Q1?
It depends upon the relationship, the product, and what level of orders they have placed. So there will be some absorption which will happen, but it does not necessarily mean it will be a complete absorption.
Thank you. Mr. Doshi, please rejoin the queue for more questions. Next question comes from the line of Naman Parmar with Nivesh Investments. Please go ahead.
Yeah, thank you for allowing a follow-up question. I just wanted to know on the tariff side, so after the 90 days, how much would be the tariff on the port surface product on the basis of reciprocal?
I think this is the question which Trump and Mr. Modi can only answer. I am not privy to it because it's something between the countries to negotiate and settle. And I don't think even both of them probably would be knowing at this point in time where we are heading. So I think when I know, and you'll also be knowing the same thing because it's going to be from the newspaper and the media.
Okay, yeah. Okay, thank you.
Thank you. Next question comes from the line of Dixit Doshi with Whitestone Financial Advisors Private Limited. Please go ahead.
Yeah, thanks for the opportunity again. So, one clarification, you mentioned that Crayons has started, but it will start contribution into the revenue from H2. Nothing in the H1?
Could be there, but marginally. I'm saying meaningful contribution.
Okay, so even for Chromia also, it will be more like H2 only?
See, but basically these are all different products being differentiated. Does not mean the volume growth will come additional. These are just additional products which will be making on these two machines. On the products which we already make, the volume will remain more or less same.
Yes.
So maybe the margins may differ a little bit. The offering to the market will be different products coming from these two machines.
Okay. And as of now, due to all this uncertainty, we are still keeping our capex plan on. I mean, there is no postponement we are planning.
Ladies and gentlemen, the management line has been disconnected. Please be on hold while we quickly get them reconnected. Ladies and gentlemen, the management line has been reconnected. Please go ahead.
Yeah. So I was asking, due to all the uncertainty prevailing currently, still we are keeping our capex plan on, right? 440 crore. As of now, we are not planning any deferment.
No. CapEx is already committed. LCs have been opened, machines have been ordered, and machines will start flowing in next quarter. So we cannot defer.
Okay. And one last question on bookkeeping side. This year, if we see year-on-year, the right-of use asset has gone up significantly from 18 crore to 45 crore. So why is that?
Can you please come back? You are not audible.
Can you hear me now?
Yeah, you are audible now.
Yeah. So I was asking, in the balance sheet, the right of use asset has gone up significantly year-on-year from 18 crore to 45 crore. So any particular reason for this?
No, this is not a write-off. Actually, we have rented a new property, and as per the accounting norms, we are supposed to capitalize. We have rented a new corporate office, and the commitment on the new rentals are, as per the new norms, we have to capitalize that.
It's a long-term lease, basically.
Thank you. Mr. Doshi, please rejoin the queue for more questions. Next question comes on the line of Rahul Kumar with Pokarna. Please go ahead.
Hi. Can you tell us if currently whatever orders you are supplying is 10% tariff which is applicable within this interim period? Who is absorbing that? Buyers, you? Can you give us that sense?
Tariff is implemented for the people or the customers who import the material, not on us. So the customer is obliged to pay the import duties when they import the material.
Right. So your realized price before this tariff and now so far is same. Volumes may be affected because of the uncertainty you are facing.
Yes.
And who are the other countries who supply your kind of products into US? Like who are your key competitors?
The tariffs are almost on all countries who export such products.
Right. And who are these other countries?
There are many countries. The countries include Vietnam, Thailand, where the tariffs are even higher than India.
And is it get manufactured in US, your kind of product, or any kind of tariff? Like what is the differential in terms of manufacturing costs or any other parameters which will be difficult for them to manufacture back in US?
This product is manufactured in different continents like Asia, Europe, North America, and also in South America. I think probably Australia and Antarctica are probably not manufacturing it, and they're importing if they are using that product. So there are products also in there are also manufacturing plants in America, and these were even in the pre-tariff regime and are continuing to expand in the post-tariff regime as well. So there is definitely, I believe, a cost of production difference between producing in America and India, that is, or any other part of the world for that matter. That is the reason the import quantity into US is higher than the local production capacity. Now, how much the cost differs is completely a private information which we are not privy to, because every manufacturer has its own cost of production depending upon what their operational efficiencies are.
Thank you. Mr. Kumar, please rejoin the queue for more questions. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Ankush Agarwal with Surge Capital. Please go ahead.
Yeah. Hi, sir. Thanks for the follow-up. So in our Q3 con call, we had sort of indicated that for FY26, even though we won't necessarily have a new nameplate capacity, but due to some operation efficiencies like reduction cycle time, we will be able to increase some throughput, and that will give some flip to top line. So are we still on that? Like, and if you can quantify what kind of increased throughput we can expect?
As I told you in one of my opening remarks, considering the current uncertainties, we are not providing any projections into the future. I think once we have more clarity on how the tariff environment is going to pan out and how the demand scenario is going to pan out, we'll probably talk and give more color on your question.
Yeah, I got it. I'm not saying like how much you will be able to sell, but how much you will be able to, increase the throughput, like, that you can cater if the demand comes. Like, what revenue will achieve obviously is very uncertain, but based on your internal improvement that you're targeting.
It all depends on the market. This question is very vague.
I'll tell you why it is vague also. See, the throughput is the function of how efficiently we can produce. If I get a short cycle orders versus a long cycle orders, the throughput is going to completely change. So I don't want to give a theoretical number and again create a confusion for the next call. So I would rather not make any comment on it. And I hope you understand that. Thank you so much.
Yeah, thanks.
Mr. Agarwal, are you done with the question?
Yeah.
Thank you. Next question comes from the line of Dixit Doshi with Whitestone Financial Advisors Private Limited. Please go ahead.
Thanks for the opportunity again. Just one question. So, just to understand, let's say the 10% tariff remains even after the 90 days, and that remains the final. And once the uncertainty overs, so obviously the distributors and the ultimate retailers will have to take some price hike. So, assuming, let's say, the import price is 100, what would be the, retail price? Is it 3x, 4x, if you can broadly touch upon?
It depends upon the product. And also, if you have been following some of the U.S. Building material companies, for example, let's say Home Depot. Home Depot is announced that we are not going to make any price increase. So it's not that price increase will typically be done by all and across every product. It is a very specific thing to a particular industry, product and the segment. So that is one. Secondly, the product is sold for the end consumer. If suppose the same product which is probably sold in $5-6 a square foot in export market, by the time it lands at the consumer home, it can be anywhere between 40 to 50, and if the product goes up to, let us say, $10-12 on FOB, it can be around $120 for the installed. But then you have to understand there are several layers by the time why it becomes 60 or 120. Because there is a distributor, there is a fabricator, there is a component which everybody has to take care, and then there are taxes involved, the installation, and everything.
So basically, transportation.
The end value from 6 to 60 or from 10 to 100, which is probably 10 to 12 times, is all depend upon which market you are operating, from whom you are buying, because what you are buying directly versus whether you are buying from a Home Depot and what type of material you are buying. So it can be on an average 8 to 10x.
Okay. So I understand. So my question was due to, let's say, if it is a 10% tariff, then it might be possible that to earn the same amount of profit, a 2-3% hike on the end product and retail price would be sufficient to compensate. So that's why I am asking.
This is something which is very tricky to answer, because everybody has their own cost matrix and to what extent they are going to pass on. So it's not that just because when you are saying a 10% tariff, if you do a 3% increase, does not necessarily mean that you're going to get 10% out of it.
Okay.
Because at the end of the day, you don't lose what dollars you are earning today. So if you are losing $1 and you say that I want to cover only 30 cents, then that 70 cents is still lost.
I think in our opinion, let's not discuss tariffs, because this is not in our hands nor our importers' hands. So we'll have to cross the bridge when we come across. Whatever the tariff will come, we don't know how the importer will observe, how much price addition he will do or he will not do. So let's not discuss what is not in our control.
I think it's more of a speculation. We can build the Excel model around it, but probably it will not really be the right picture to do it.
Yes. Understood. Thank you. That's it from my side.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Ladies and gentlemen, as there are no further questions, we have reached the end of question and answer session. I would now like to hand the conference over to the management for closing comments.
Thank you so much, and we look forward to connecting again for the next quarter. Have a great day.
Thank you. On behalf of Pokarna Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.